Welcome. In this presentation, we're going to take a look at a cash budget and also an accounts payable budget. So if you'll turn to that section of your lecture notes, we'll get started. Concord Inc. is preparing the cash budget for October. The following information is available. The October 1st cash balance is $10,000. Actual sales for August and September and projected sales for October are as follows. Cash sales in the 3 months were $8,000, $10,000, and $12,000. Credit sales were $50,000, $30,000, and $40,000. Sales on account are collected over a 3-month period, with 20% collected in the month of the sale, 70% in the month following the sale, and 8% in the second month following the sale. The remaining 2% is uncollectible. So notice that this collection pattern only applies to the credit sales. Cash sales are collected in the month that the sale is made. Purchases of inventory will total $30,000 in October. The company pays for 20% of purchases in the month of the purchase, with the balance paid the following month. Accounts payable at October 1st is $20,000, which was for purchases made in September. Total selling and administrative expenses are expected to be $15,000 during October, which includes $4,000 of depreciation expense. The company plans to purchase equipment costing $14,000 in October. The entire amount will be paid in cash. The company also expects to pay dividends of $5,000. Money will be borrowed to maintain the $5,000 minimum desired cash balance. Loans will be made and repaid in $1,000 increments at the end of each month and will bear an annual interest rate of 8%. Assume no loans were outstanding on October 1st. Well, with that statement there, we know that no principal or interest will be paid during October. So when we go to look at the financing section of the cash budget, there will be no loan repayments or interest payments. Prepare a schedule of expected cash collections for October. Prepare a schedule of expected cash payments for October. Prepare a cash budget for October. And then answer what is the balance in the accounts payable account at the end of October. So first we'll look at the cash collections or cash receipts. Notice that we're only preparing this for the month of October. We'll need the information from August and September to do so, but we are just doing a 1-month budget here. All right, cash receipts. This is primarily going to be based on sales, so I have shown what we were given. We had cash sales and credit sales, and then how they collect those credit sales. So when we prepare our cash receipts section, we'll look at what did we receive from our customers based on our sales. And the first thing is we did have cash sales during October. So those will be collected during October. Now we are preparing what is collected during October, so we won't include cash sales from August or September. Those were collected in those months respectively. Now when we look at credit sales, we'll be collecting over a 3-month period. We will collect from August. From August, we'll collect 8% of the $50,000 of credit sales, or $4,000. From September, we'll collect 70% of the $30,000 of credit sales. And from October, we'll collect 20% of the $40,000 of credit sales. So we'll collect from our credit sales $4,000 from August, $21,000 from September, and $8,000 from October. This represents during October, month of the sale, we collect 20%. Then from September, October will be the month following the sale that happened in September, so we'll collect 70% of that. And then in October, we are 2 months from the sale that occurred in August, so we'll collect 8% of those credit sales. In any event, our total cash receipts will be from cash and credit sales and will total out to be $45,000. Next, we'll prepare the cash disbursements section of the cash budget. Once again, we are only looking in October. Now, remember, with cash disbursements, you do disperse cash for many more reasons than you collect cash. And so you'll want to break that into sections. The first thing I would look at is cash disbursements for purchases. I remind you of what we were given. Purchases of inventory will total $30,000 in October. The company pays for 20% of purchases in the month of the purchase, with the balance paid the following month. And they do give us accounts payable at October 1st, is $20,000. So we're going to have to figure out, of these amounts, how much is going to be paid during the month of October. So from September's purchases, we would pay 80% of September's purchases. But we can look at the information given and you will not find September's purchases. All we know about September is that $20,000 is left to be paid from purchases made that month. We're going to pay that entire beginning accounts payable. We're going to pay the entire $20,000. Then in October, we're going to pay 20% of the $30,000 of purchases, or $6,000. So our cash disbursements for purchases are $26,000. Now once again, this is different than any prior problems we've worked. So note that the beginning accounts payable balance represents 80% of September's purchases. Because remember, in September we would have paid 20% of September's purchases. So therefore, in October, we will pay this off in full. Now that's the first section of the cash disbursements budget. You compute the cash disbursements for purchases. But you'll also want to think about what cash will we disperse for other expenses, such as direct labor or selling and administrative expenses or overhead costs. You'll also want to look for other cash disbursements. So this kind of shows you the three major categories within cash disbursements. Cash disbursements for purchases, cash disbursements for other expenses, and then other cash disbursements. To do these other two sections, let me remind you of what we were given. Total selling and administrative expenses are expected to be $15,000 during October, which includes $4,000 of depreciation expense. We will need to convert that to how much cash will be spent on these, and depreciation is a non-cash expense. The company plans to purchase equipment costing $14,000 in October. The entire amount will be paid in cash. They also expect to pay dividends of $5,000. So this second bullet point shows the other cash disbursements. Would not show up as an expense on the income statement, but does in fact require a cash disbursement. So cash disbursements for other expenses will take the $15,000 of selling and administrative expenses, but take out the non-cash expense of depreciation. Cash of $11,000 will be spent on selling and administrative expenses. Then our other cash disbursements, we are going to purchase an asset. We're going to pay cash of $14,000. We're also going to pay dividends of $5,000. Both of these require a cash outlay, but don't appear as part of our expenses. Our total cash disbursements then, $26,000 for purchases, $11,000 for selling and administrative expenses, $14,000 for an asset, and $5,000 for dividends. Our total cash disbursements are expected to be $56,000 during October. Now we can put this all together in the form of a cash budget. To do a cash budget, you will want to remember that the beginning cash balance was given in the very first bullet point to be $10,000. Then we computed estimated cash receipts to be $45,000. That was in Part A. Cash disbursements are expected to be $56,000 from Part B. So this will leave us a cash deficiency of $1,000. So we are going to need to borrow some money. But we need to figure out how much. To do that, you need to consider that the minimum desired balance is $5,000. And the company will borrow money to maintain that. So since we have a deficiency of $1,000 and we need $5,000, we're going to need to borrow $6,000. So whenever you figure out how much to borrow, always be sure you consider the minimum desired balance. And that'll be dictated by management policy. So you can see from what we've done so far, you have to prepare a cash receipts and a cash disbursements schedule before you can do a cash budget. Now we're also going to prepare an accounts payable budget. This is another balance sheet type budget, and so it will have a beginning balance, and that was given to be $20,000. That was there in the fourth bullet point. Purchases during October are given to be $30,000. So this is for the month of October. Then cash disbursements for purchases are $26,000. Notice this is not total cash disbursements of $56,000, but just the disbursements for purchases, because that's all that flows through the accounts payable account when it's a trade accounts payable, meaning it's for inventory. That's going to leave us an ending accounts payable balance for our budgeted balance sheet at $24,000. That's it for the cash budget. Bring any questions you have to class, and I look forward to seeing you then.